That Amy, she's got us. Well, here we go, folks.
Okay.
We're gonna let people roll in here for just a minute or so. I see a bunch of people popping in, so we will get started in just about 30 seconds or so. Looks like we got a good crowd coming in today. Welcome, everybody. Hope you're having a fabulous Tuesday. I'm not Jody Hall. She's actually listening into the background right now, so I'm a little suspicious on why she's not on here, but she's at a conference today and didn't know if this would work out well. Sometimes Wi-Fi on the road isn't the best, so you're getting me as your replacement, and we are gonna get started. So welcome to the SIP, where conversation sparks connection, collaboration fuels innovation, and industry leaders come together to tackle the challenges shaping our mortgage industry today. A little bit like catching up over coffee. So we've all got a mug with us, of some sort. But with insights that move the industry forward. As most of you know, we're very passionate here at the Mortgage Collaborative about empowering our members to thrive. The SIP has grown into more than just a show. It's a platform for real world strategies, big ideas, and the kind of perspective that comes from working together. So thanks for spending part of your day with us. We really do appreciate it. Today's episode, we're really lucky today. Today's episode is sponsored by Click and Close, which offers flexible, accessible solutions designed to help borrowers overcome affordability barriers, especially in today's higher rate environment. So joining us today are Kim Schenk, who is the National Sales Manager at Click and Close, and Tamara Delacruz, who is the National Production Manager at Luminate Bank. Welcome, Kim and Tamara.
Thank
Thank
you.
you.
So happy to have you ladies with me today. This is going to be a fun call. So I think we'll get started with Kim. I would love for you to share with our audience. Those who are tuning in may not be familiar with Click and Close. So I would love it if you would tell us a little bit about yourself and tell us about who Click and Close is.
Okay. Thank you. Thank you very much, Faith. We're super excited to be here today. So my name is Kim Schenk, and I probably know some of you because I've been doing this forever. And then I was just at the Mortgage Collaborative event in Boston, so hopefully I'm sure I met some of you all there too. But I'm the National Sales Manager for Click and Close Correspondent Lending. And like I mentioned, I've been doing this for many, many years. For the last several years, I worked with a company prior to Click and Close, providing affordable lending strategies. So we have deep expertise here in affordable lending. I'm passionate about the space, and I have to say that I'm absolutely thrilled to have Tamara here today. She warms my heart to hear about her experience with Click and Close and our products. So I'm really excited for you all to hear from her. Just a little bit about Click and Close. We're based in Addison, Texas, and have been serving the mortgage industry since 1940 under various names, so a very long time. We're a tech-driven company and an early adopter of e-notes. So we're big on e-notes. We love e-notes. We actually pay a little more for them. We have success in the affordable lending space here at Click and Close, and we've closed $2.5 billion of Smart Buy loans and served 10,000 families. We are a Fannie, Freddie, Ginnie seller servicer. And regarding the servicing, especially Ginnie Mae, these loans we buy are put into Ginnie Mae securities, and we're highly rated with Ginnie Mae, and we're a very high touch servicer. We have 10 billion in servicing in-house. It's all serviced in-house. We have wholesale, retail, and correspondent channels. But our main offering, all that we buy in correspondent lending, is the down payment assistance Smart Buy program. And we are the largest issuer of these types of loans. So that's a little bit about me and a little bit about Click and Close Faith.
Fabulous, fabulous, great information. So we also have another passionate person about DPA with us today. So Tamara, I'd love for you to tell us a little bit about your background, who Luminate is, and kind of what your role is within the organization.
Oh, thank you. I'm glad to be here. So, My father raised me to always stand up for the little guy. That was always something in forefront of my mind. And he was a realtor, and he did a lot of work with underserved folks. And so when I went into the family business and became a buyer's agent, DPA instantly caught my eye because what a great way to help those who are underserved. Back then, DPA was bond. Back in the 80s, it was bond funds and it was there till it was gone, and then you had to wait a year. So we have so many more options now. So after my parents passed away, I got out of real estate, went into mortgage, and immediately tried to seek opportunities where I could work with DPA. And I was a processor to start, and I processed every DPA loan in my company. And so I became their DPA SME. I eventually got into corporate and started working in the product environment, helping to build DP programs into Encompass and just everything. So I am extremely passionate. It is good for our community. It makes you feel good. I like to feel good when I go to work, and it makes me feel good. And for LOs out there, these folks will refer everybody and their dog to you when you do something for their family, when you get their kids into a house where they have a backyard and there's enough room for abuelita and the dog and everything. So and I was in Arizona, so you know what? Running around buyers in August to see 18 homes back in the day when we did that, it was worth it when I actually could get them in a home. So, Luminate is a small community bank with a large mortgage division.
Mhm.
We're currently working on growing the bank. We're utilizing our loan officers to help grow and connect clients to other financial products. And we're doing all that while leveraging the bank platform to help our mortgage division.
Yeah. Fabulous. So today's conversation, I think, is really, really timely because the affordability crisis, if you want to call it that, has deepened even further than I think what it was at one point in time. Home prices have surged 60% since 2019. Rates, of course, as we know, are elevated. And then, one of the big things in the mortgage industry right now is insurance premiums and
Mhm.
property taxes continue to rise. So, Tamra, I would love to, I know that we talked about this on our prep call too. You've had a very personal experience with Click and Co. So don't hold it in any longer. Would love to have you go ahead and tell us about your personal experience with Click and Close.
Sure. So, although I've worked with DPA programs for years, I never utilized one until I bought my current home back in 2022. So, using the Click and Close program, I went ahead and we originated the FHA first, and then I was able to utilize the 5% 5-year forgivable second. And so that 5% covered my down payment, 3.5 down payment, and gave me 1.5% towards closing costs. Now, when my realtor wrote the contract, I made sure she asked for the seller to contribute towards my closing costs. And I really think that's always a good way to go. They can say no, but hey, try to help out the borrower, your buyer if you can. So that gave me 4.5% towards my closing costs. That's a lot.
Nice.
That's a lot of money. And
Mhm,
my down payment was already covered.
mhm.
So by doing that, that covered all my closing costs. I was able to get my earnest money and my home inspection refunded because those were from my own funds and there was sufficient money to do that. And after that, I still had a little bit extra from the seller contribution, right? And so you don't ever want the seller contribution to go away without being used. I mean, you got to
Right.
use up the seller's money, right? So then I found the biggest, fattest, most expensive home warranty I could get for a year. And that was just enough to cover it. So I came into the deal and I got into my house for $0, which was exactly what I wanted to do so that I could, preach what I say. I can actually live up to what it is that I'm teaching people. And in 2 years, 2 more years, my 5-year forgivable loan will be forgiven. So I will have instant equity. And Click and Close was awesome to
Fabulous.
deal with, and they still are.
Yeah, we taking good care of you servicing wise?
Absolutely.
Good, good. We couldn't ask for a better testimonial than you, Tamara. Couldn't
Yeah,
ask
I
for
mean,
it. We appreciate you and your business very much.
Thank you
it's
very much.
exciting to hear it from somebody who actually has experienced it, right? That's had that, because it does make a difference, I think, when we feel those things personally, which kind of runs us into like what I would love to talk about next. We talk a lot at TMC about, having a greater purpose than ourselves and how we impact the lives of home buyers, the people in our network, and the communities that they serve. So Kim, I would love if you would walk us through kind of what Click and Close sees as your purpose and the products that you offer.
Okay. Yeah, thank you. Well, our purpose, we're very focused on affordable lending, and our purpose is to build sustainable home ownership and to provide an excellent experience to our correspondent clients and to their borrowers. In the correspondent division, our purpose is to let our clients know about the fabulous products that we offer. And then we do training because everybody knows loan officers, they need the product, they need the product, they need the product. You get it, you put it on the rate sheet, and then nobody originates it. Well, we're
Yeah,
big
that
on
one
training.
deal, right? Yeah, that
That's
one
right, for
deal
that
that
one
happens.
deal. Yeah. We're big on training. We train hundreds and hundreds of loan officers, and that really is the key to, getting the program up and running, is getting those boots on the ground trained. So, as far as our product offering, very excited to share that with you. As you mentioned, Faith, there's a market-wide challenge in the, right now in home lending, but there's a challenge even for credit-worthy borrowers, and middle income earners struggle with the homeownership barriers to, coming up with a down payment. And our program is, designed to help. We believe our program is the solution to providing, getting more borrowers into homes. Our program is fully delegated, and the correspondent client makes the underwriting decision. So we leave it entirely up to you. Like I said, we bring you on board, we train you, and then the decisions are up to you. It's fully delegated. The program is an FHA first lien with a down payment provided by Click and Close's partner named Redco, and that's the second lien. So we provide either a 3.5% or a 5% down payment on the repayable. On our forgivable, we're just 3.5%, but we offer both repayable and forgivable. The repayable down payment lien can be amortized for either 10 or 30 years, with a 10-year balloon. And the rate on the repayable second is 8.99%. And the rate on the forgivable is zero because there are no payments. The forgivable is available with a 3.5% down payment, zero interest, and forgiven in 3 years or 5 years. I think that is just fabulous marketing. I mean, I don't know what you think, Tamara, but for loan officers, I mean, to market to the community, they're realtors, that I can get somebody into a home with zero down and even contribute towards their closing costs with the 5%, is great marketing. On the forgivable, we do find that the rates are a little higher. However, in some instances, because the borrower doesn't have to qualify for that payment on the repayable second and there's zero interest on the forgivable, their payment may be, although the rates are a little higher on the forgivable, they may have a lower payment
Yeah.
doing the forgivable. What else can I tell you here? No first-time homebuyer requirements and no income requirements. We have numerous examples of borrowers that make the income, they just haven't been able to save for the down payment due to high rents, student loans, and I'm sure, the people on this phone call, this webinar have all experienced those challenges. We do require an AUS approval, although we will allow manual underwrites on the forgivable. We allow 2-1 temporary buy downs, which is great for marketing as well, especially for the builders. And it's offered in, our programs are offered in all states except New York. For mentioning builders, we do offer builder forwards too, which is unique, I think, for the DPA space. So just wanted to mention that. But that's a little bit about our purpose and our product.
Fantastic. Tamara, you're getting kudos in the chat from Brad Cardwell from DPR. He's giving you big congrats on the DPA personally. So that kind of leads us into, Tamara, I'd love to like dig just a little bit deeper with you. So we heard your personal story. Now share with us a little bit about the product that you use at Luminate Bank,
Well,
and how it works for you.
so first, DPR, down payment resource. Is that who that was? Okay, I used
Brad
to work for them.
Cardwell. Yeah. Yep.
Wonderful company as well. So we have, as was brought out by Kim, so the programs that we have, the things that I sell, that I like to tell the LOs when we're talking about it is, like was said, all states. You can do it all states except for New York. Nobody seems to like New York. I don't know why. But
The
we
hard
have,
approval process there for
yes,
anybody.
we just brought on a huge New York branch, so we definitely understand that. But so the loan products are FHA, and then they do offer USDA. And when I was buying my house, there was the 5% forgivable. Now it's just 3.5%. But that is based on the sales price. But I do have to add a caveat or appraised value, whichever is lower, right? So you always have to add that in there. So it is better than just offering it on the first loan amount. So it is off the sales price. As Kim said, no first time home buyer requirements, no income limits. That's huge because all of the state programs, DPA programs, have income limits. No max DTI with AUS approval. That's another huge one. And the income used to qualify is not household income, which we see with a lot of the state programs. It's your IRLA qualifying income. It's what's on the app. And there is no max asset requirement, so there's a lot of benefits to this national program that beat out some of the state programs. So that just shows that if you have a borrower who is above the income limit for whatever state program there is, they have options. Now, obviously, the program is intended for those who need assistance, right? Who need assistance. So, if you got 20% to put down, probably not the program for you. But if you need that help, then it's an excellent program. And I just wanted to mention one of the things Kim said about training is I am a big believer in training. We require all of our LOs to take program training. And it's nice when we can have this training every few months from Kim and her team, because number one, it allows me to record it so that all new LOs coming in, one of my requirements is watch this training. But it also keeps it in front of the LOs. It's fresh. And this new 3-year option, right? I mean, 5-year is great, but man, I wish I had the 3-year option 3 years ago. So it is new, and that is a really great option to have.
Things continue to change in our industry. And Kim, isn't it fabulous that you've got such a great champion in
Oh my gosh.
Tamara? It doesn't
Couldn't
get
ask
much
for,
better
I
than
know.
that, does it?
Yeah.
Yeah.
She
So
was actually on a training. We were doing a training, right? A refresher, a welcome call or something. And another person that works here said, there was a lady on the call today and she was so awesome. And I was like, that's who we need for the SIP.
yeah,
So,
absolutely. Absolutely. So Kim, lenders are always looking, especially right now, for ways to boost their revenue, win more deals. Beside helping homebuyers with their down payment, how do you help the lenders boost their revenue?
boosting revenue, that's a big topic, right? At the end of the day, that's, we all come to work to help our companies make money and
Absolutely.
continue to thrive. Boosting revenue, if you do FHA loans, you can do this program. Um, and it will add loans to your pipeline, boost, therefore generating, additional revenue. I know there are many state bond programs and HFAs offering great programs. However, a national DPA is good for either bond program fallout. If it's just some super duper program and they meet all the requirements, but darn, they make too much money, or so then you look to a national program. That doesn't have all those state bond requirements or the HFAs. Many of them have unique processes and often limit what you can make on these loans. And we don't have those limits. We have a very wide rate stack, so it can be profitable. You can make money on these loans. I hear from a lot of folks, and just over the years, the state, they don't like DPA state bond programs because they can't make
Yep.
any money.
Yep.
Well, with this program, you can. So we price very competitive and we pay more premium than the state bond programs. So that's the way you grow revenue.
Yeah, absolutely. Absolutely. And it's good to hear. I mean, like options are always a good thing, right? It's like if
Mhm.
you can't get it to work for a borrower one way, to have an option to go a different path is always a good thing that you've spent some time with that person. You don't lose the transaction necessarily.
Yep.
Um, Tamara, I don't know if you're aware of this and don't know if Luminate participated in it, but we do a Pulse of the Network survey within our network twice a year. And here are the top 3 priorities that our members identified when we did this in May of this year. Evaluating and implementing new technology, business development to grow volume and market share, and creative ways to drive revenue and execution in secondary markets. Which do you think of these resonates the most with Luminate's current focus?
I would say number 2, business development to grow volume.
That's what I like.
Luminate has a deep, deep recruiting pipeline because we offer an attractive platform for loan originators. And some of the things that's included in that is national licensing, excellent consumer experience. The company's really focused on providing the very best customer experience through our banking application and our online mortgage portal. And then our products. Being part of a bank really opens up the different products that can be offered. We offer construction, commercial, bridge, reverse, non QM, portfolio, and of course, we offer both state and national DPA products.
Fabulous. Fabulous. I would have guessed the same thing. We've watched Luminate. You're in my backyard. I'm in Minnesota. So
Okay.
we've watched Luminate grow and actually merge with a couple of other lender members that were within the TMC family.
Okay.
So we've been kind of anxiously sitting on the sidelines watching all the great work that you're doing at Luminate. Kim, every lender wants to know. I'm sure you experienced this at our Boston conference with, hopefully you had lots of great, great conversations while there.
We
But
did.
every lender right now is kind of watching what's happening and wants to know what is coming next. What are you going to be doing next? What are you implementing that's different? So what is on Click and Close roadmap as we're heading towards the end of 2025? Hard to believe that, don't you think?
Oh my gosh.
And
So hard
and
to believe.
heading into early 2026.
I know.
It's crazy.
I know. Well, as far as our roadmap goes, listed the 3 things that you came away with from the conference in Boston, with tech being number one. And we're very focused on, we're building a data lake right now where we can put with, all of our systems will go into one pool and then we'll be able to pull reporting out of that. That's a big initiative right now. So I would say tech is an initiative here at Click and Close. By doing that, we will be able to provide scorecards to our clients and just have better reporting for our clients. So we're super excited about that. But I think more importantly, we have a new president. And we're excited, and he knows Jody Hall. I think they're friends.
He
So,
does. He
yeah,
does.
yes, his name is Ian Kimball, and we're super excited to have him join Click and Close. He's brand new, so I met with him yesterday and I said, "Hey, I'm doing this thing tomorrow at TMC. I need to know what our roadmap looks like." He's like, "I've been here a
Fantastic.
week." Yeah, I've been here a
Good
week.
timing. Good
Yeah,
timing. Yeah, you gave him 5 days there to
right.
activate himself a
So
little bit.
what he said to me is he said, think big. So we're building, like I mentioned, the tech initiative is underway. But correspondent lending, I will say, is the fastest growing division at Click and Close. So I'm gonna say what he said, and growth is on our roadmap. And
Ah,
think big.
think big. I absolutely positively love that
Yeah,
came
me
out
too.
of somebody their very first week
Yeah.
somewhere. What
So
a
it's super
great,
exciting.
yeah, what a great thing. What a great opportunity. We feel exactly the same way about our leader and they know each other.
Hmm.
So we feel that exact same way about her. In the chat, I don't know if you guys noticed, but in the chat is a great comment from Felicia Wells. Great conversation and perfect duo. And Tamara being able to discuss her own wonderful experience to the product Click and Close offers made this more informative than ever. Luminate has an amazing team and I've loved working with them for years. So big kudos from the chat environment for you both, That is absolutely fabulous. So we're wrapping up the end of our time together, ladies. Can you believe that it just goes absolutely positively so fast? I am going to ask you like one more question though, Kim. I'm going to like pull a quick one on you before we wrap
Okay.
up here.
Oh
What was
boy.
your favorite thing about being at Cheers in Boston?
I loved the event. I loved how everybody, I've been going to conferences for years and years and years. I'm embarrassed to say how many years, but,
Don't
and
be.
yeah. Well,
Don't
the
be.
Mortgage Collaborative was very different and a very different experience for me. I'd never been before. That was my first time to attend. And everybody was so warm and welcoming. And just it's a family. It feels like a big family. But it was a giant family. How many attendees were there?
300, over 350. It was
Yeah.
one of our largest
Wow.
conferences we've ever had. 353 says Amy Bohr in the comments. She would know. She plans the whole thing.
I would say the welcoming, just the warm welcome, by everybody, whether it was a partner or a lender, just all very collaborative.
Yeah. Oh, fantastic. Fantastic. I'm really, really glad that you had a great experience. I always like to talk to people that experience it for the first time because
Mhm,
they haven't seen it before. And we love it when it's a good, refreshing surprise. And everybody wants to talk to everybody
mhm.
while there and learn exactly some of the things that we learned today and what you're up to. So, a huge, huge thank you to Click and Close for sponsoring today's episode. You are kind of a dynamic duo, Kim and Tamara. I think everybody could see that. I would love your insights that you had today, the stories, and like most importantly, probably your passion for progress in this aspect of our industry. For our listeners, thanks for tuning in. Curiosity and engagement are what keep our community moving forward. We'll be back next Tuesday, October 14th. Jody will be back next Tuesday, October 14th at 2 p.m. Eastern Time for our TMC community. And then we do go live at 4 p.m. Eastern on LinkedIn for the broader industry. So you'll see us out there on LinkedIn as well. If you found today's episode valuable, imagine 3 days of a similar energy. Um, our We're calling it Desert Disruption. Our next concert is Desert Disruption in Scottsdale is around the corner. It's under 5 months away. We cannot believe that it happens so quick. It's not too soon to register. Recommend registering now when we got some early bird pricing going on. And so register and book your hotel today. If you're not yet part of our community, reach out to me, to Jody, to Tony Bramley, who is our director of growth. We'd love to help you get started and be a part of this amazing community. Ladies, you are absolutely fabulous. Thank you for doing this with us today.
Thank
It's
you.
been so much fun talking to you and getting to know you a little bit better. And come back and do it again sometime.
Thank
Thank
you.
you. Special thanks to Tamara.
Well, thank you. And
Absolutely.
hopefully I'll see you in Scottsdale because that's my old neck of the woods. So I'm hoping to be there.
Well,
Perfect.
now that you've said that, we're going to make sure that you make it there. Would love to meet you in person for sure, Tamara. Have a
Wonderful.
wonderful day, everybody. It was great
Thank
talking with
you.
y'all.
Thank you.
Bye-bye.
Bye-bye.
Bye.